Welcome back to Raw Stocks. Thanks for joining me for another episode. My name is Rustic. Today we're going to dive into the Tesla chart, see where price went, see where we think price might go. Today was a PPI data drop, which there was a lot of hype in the market, ultimately led us to having a nice green day. So let's go ahead and dive into the charts and see what happened. I went ahead and threw on a moving average indicator for the chart today. Also went ahead and pre-labeled some areas of interest so we could see if it gives us any hints on where price might be headed. So like I said, today we had a nice green day. We opened at 271 and some change. In after hours, we're up in 270 high 276s, maybe even a little higher. Might have almost hit 277. So we're having some nice movement in the market. What the chart's telling us, and this is something I went over in my video yesterday, is we had a nice big wick from 2 days ago. Go ahead and label it blue. A lot of liquidity built up in there. Still haven't tested all the way up to that high of that wick, but we did proceed with some bullish price movement today. We broke these two wicks, which was an equal high, and we continue to head higher. So we're above the moving averages. Technically, when we're above the 50, the 20, and the 200, which is below, it is bullish. We're starting to get, a little far off the 50. We got the 20 moving up. Might be eventually getting across. Right, we're heading to gap open, which we have labeled 279 and some change, almost 280. We have a 4-hour unbalanced price range, and that is at 284 and some change. We got gap close above 290, 291 and some change. We got buy side liquidity resting up inside of this wick. So all areas of interest, and then we ultimately got supply, which came back from 2022. So we could be reaching all the way up for that. But these are some levels we're going to be watching. Also marked off, and you can see it here, the resistance trend line from the entire decline from the peak in 2021, which we've touched once, we touched twice, didn't touch here. We barely broke out back in July, and then we rejected it. We could be making another run up towards that resistance line. We could see it reject. We could see it break through. We could see it break out, back test, head up even higher. That would send us well into the 300 range if we were to, potentially break out, back test, and head higher. We could reject it buy side liquidity, just grabbing liquidity that's resting here and then heading lower again. And so we'll just have to see where price goes. But again, my area of focus, which I want to see this actually break out of this candle wick, and if price wants to head higher. So we're still just kind of toying around in here. We got a fair value gap that rests in this daily gap. We got another fair value gap down here between this candle wick and this candle wick, right? Which we're not too interested in that right now unless price starts to move down towards that. But we are more interested in this fair value gap that's right here that we seem to be pushing off of, right? So fair value gaps often have like a reverse pole, like opposite of a magnetic pole, right? Where fair value gap will be laid. Fair value gap will cause price to run off of it, and then eventually it pulls price back down into it. So both case scenario, I want to see, to really buy into this move, I want to see this liquidity fully taken and breaking out into the gap, and then we could look at price running somewhere into the gap, potentially closing, potentially running up to buy side liquidity and supply zone. It could reject anywhere on here though. We got that resistance line of that downtrend. It could hit that, balance this price range, come back down to test some of the moving averages. It's entirely possible. It could run up anywhere in here. If it leaves the gap open, it's unfinished business. So if we run up into the gap and don't close it, we could see it come back down and then make another run to try to close the gap. Definitely a possibility too. Yesterday I referenced where we could be in an Elliott wave structure. I believe that we could see this could be a B, C move, right? So we'll want ABC, could get another ABC and go higher for another 5-wave move, which would send us much higher. Could also be in a 5-wave move itself, which would be 1, 2, 3, 4, 5, ultimately taking us up. If that's the case, we'll see another rejection after 5 finishes it for a corrective move to the downside. And so again, we're just looking for clues. We're looking to see what's going on with price and where it's taking us. We got options expiration tomorrow, so that could be a market mover. It could end up being nothing. Sometimes the rebalancing and the closing of contracts at the end of the expiration can sometimes happen earlier on in the week. Could account for some of the reason we had this breakout and we've been moving up. So we'll see what tomorrow brings. Let's go ahead and drop down into the 1-hour chart. And we can see that we're just resting right above the 20 moving average, right? We're lined up. This is fairly bullish, but it started to level out here with the 20. So if we don't want to move through this liquidity range, again, which was in a daily wick, we could see price fall down below the 20, come back down and test the 50, could even fall back down to balance some of these unbalanced price ranges that I have below, and could make another run to test the 200 period on the 1 hour. All possibilities. But again, if we see price break out of this liquidity, it doesn't want to take this and hold it, then we're going to see price run up, potentially rejecting that downtrend and potentially running to some of these other levels that we have marked out. So no clear indication this 20 period moving average flattening out. Could just be allowing time for the 50 to catch up with it, which happens sometimes, where then price will then again break out off the 20 and run even higher. So we're really going to be looking at this 1 hour time frame to give us some clues as we lay some more 1 hour candles down tomorrow to see if that wants to head up, if it wants to start coming down, or if it, what it wants to do. So we're really going to be watching that 1 hour time frame is going to be important over the next trading session. So really pay attention to those 1 hour candles. Let's go ahead and drop down. We did have, lastly, in the 1 hour time frame, we did have this 1 hour fair value gap that still is open. Price pushed off of it on Wednesday, Tuesday, Wednesday, kept it open, pushed off of it, ran off of it a little bit. Nothing else of interest in that part of the structure right there. We can drop down to the 15-minute, see if it tells us anything different. Again, see we're in the liquidity zone, the blue, still in that wick. Haven't done anything to break out of it yet. We do have a 1 minute unbalanced price range. We could see that tested before we run up. We do have what appears to be fairly bullish setup here for the moving averages, right? We're still above the 20 on the 15. Again, in the post market, we're up here off of the 20 period. We got it lined up with the 50. We got the 200 lined up. It's all moving forward. Could see this continue to chop around in this liquidity zone, right? While the 200 catches up a little bit. So that's not uncommon to see a little bit of chop while we wait for that 200 period to come up further, catch up, and then potentially break out again off of it, right? You see it down here sometimes, right? We break out, we kind of chop, right? In this case, we came back down, but we got back above it, right? But this is all kind of, here to here, kind of just sideways moving, right? And then eventually a big breakout. We could see something very similar here where we came up, we blew off, we came back down, we kind of chop around, we let that 200 catch up, and if price wants to run higher, we could see it as that 200 period catches up on the 15, big breakout, right? So we're going to be watching that. We do have a trend line here that I drew that's coming off the low from back in August, right? We seem to be respecting it. We got a low, we got another low here that we tested, we held, we tested again, we broke out. So something to be watching. I'll extend this out into this liquidity range. What we could see, again, chopping around early next week as the 200 catches up. Could even come down and try to test this one more time. And then again, right it, maybe break out, maybe test this downtrend and reject, maybe go higher than that. So we'll be watching the 15-minute as well to see kind of how that prices reacting with the 200 period moving average as it starts to come up. We also want to be aware that we do have untested, unbalanced price ranges below. We got an order block and we got sell side liquidity. So if these moving averages start to curl over, because this was just a liquidity trap where we were buying time, building up orders in order to sell off, we're going to see these moving averages start to curl over and going to give us a death cross on that 200 and then just come crashing down. So we're going to be watching that 15-minute pretty closely as well. Let's see if there's any clues on what's going on in the 5-minute chart. Again, obvious that we're just sitting in this liquidity pool right now, haven't clearly broken out. We're on the upper range, but sometimes what happens is that price will get pushed all the way, basically to the point where it's eating up the liquidity that was sitting in that wick. Bam, sells off. So we'll have to see. Again, we got bullish moving average line up. We're just right at the 20 period. We're above the 20s, above the 50, above the 200. So it is a nice setup for a continuation if that's going to happen. We do have another order block sitting down here. I see another fair value gap down here, which was tested and ran off. So in order for this to start to look bearish, we're going to want to see this fair value gap tested. We're going to want to get below the moving averages. We're going to balance this 1-minute price range. We're going to test this order block and then see how it reacts. If this is going to get bearish, it needs to break through all of these shorter time frames from the 273 unbalanced range down to the order block in the high 260s, and then again testing the 5-minute unbalanced range. That's where we could see this kind of roll over, chop around, come back down and test this trend line, and then it could still break out. So we're not saying this is bullish, we're not saying this is bearish yet. We're saying right now they're buying time, running the price up slowly, not too much over the last couple days since that last breakout, and it's just buying time for a move in another direction. I'm not going to drop down to the 1 minute because it's going to say something very similar, and we're really going to still be targeting those same targets, whether it's upside or downside. We're looking at breaking out of this liquidity. We're still in an optimal short trade entry if price wants to stay around this area. We haven't got back up to where the fib levels start, which would have been the peak from drop into the 1 hour. It would have been the peak from up here, measuring to the bottom down here. We're right around that 70%, that golden pocket-ish fib area, right? And so it would still be totally viable that we take all this liquidity and then end up dumping, right? So we're really looking for clues. We're really looking to see if price wants to break out of this little range, this liquidity zone, and then start to work on this gap, right? Let's see if we have any. We have some breakout candles too that we've started to test with this wick. So this was a breakdown candle. That's a very important one. We want to see it get to that gap open. Right now we're just testing this candle to see if it holds. Right? We tested it here with this big wick, and we'll go back down to the daily so we can see that, or at least see it a little bit better. Look at this daily breakdown candle. Huge breakdown candle after a giant gap. Just sold off, right? And so we've been testing that ever since we got to here, right? Into this candle right here on Monday the 11th, which was a breakout candle. We've just been testing the Thursday, July 20th breakdown candle. We haven't even gotten to candle body open. One attempt here, again, rejected, left liquidity. We're working on that liquidity now. We want to see that breakdown candle fully tested if you want price to advance. Again, back up into the gap and see if we can work on some of that and head towards buy side liquidity. So again, tomorrow we're really going to be watching the 1 hour. Let me show you that one more time. The 1 hour, we want to see this, what it does with these moving averages. See if it wants to drop and back test the 50, or if it wants to head higher. We're also really going to be paying attention to the 15-minute, which has a bullish setup, and it could continue up higher. We could also see that roll over quickly and start to head lower and test some of these fair value gaps. So I hope that's been helpful for you guys. Go ahead and drop a like, subscribe to the channel. I appreciate all your support. Why don't you guys let me know where you think things are going? We got options expiration tomorrow. We just came out of CPI, PPI. That both weren't extremely positive for the economy. And so tell me what you think. Let me know if you like the content that I'm creating, and let me know where you think the market's going. All right, guys, we'll talk tomorrow.